Lesson 3, Unit 2. Estimating cost. As a project manager, you are responsible for getting the estimates for all budget items required to complete all the project activities. You can get help from staff from the accounting and procurement office and support from other subject matter experts to get all the cost estimates. You can use a simple spreadsheet or a more complex budgeting tool to develop the project budget. You will also need to select the estimate approach you will use and identify assumptions made in the estimates, including financial, political, economic, and even organizational constraints that will affect the project budget. Another source of information useful for developing a budget is to use historical information from past projects. This will help develop a baseline that will be updated with information from the current market cost. You will also need to know any donor regulations that limit or even prohibit the purchase of specific goods or services, and the organization's policies for budgeting and accounting. The first thing that needs to get an estimate is the cost of all resource requirements. There are three typical types of resources: human resources, material and equipment resources, and service providers. Human and labor requirements. This includes all the people with the expertise and skills needed to complete activities on the project. They can be people from the organization who are reassigned to the project. They can come from the organization's hiring process, or they are on a contract for the duration of the project. You will need to create a list of all the people that the project will hire and the estimated time they will be assigned to the project and identify the correct accounting code. You need to list all the material and equipment that the project will use. It includes all the specialized tools needed by the project. For example, all computers and software that will be used by the project team. It also includes office equipment such as paper and printers. Services and miscellaneous includes all internal or external services required by the project. These include consulting services, internet, utilities, printing, communications, transportation, lodging, rent, etc. A popular format used to capture and facilitate the identification of requirements and estimate the project budget is the unit cost analysis, which is essentially a worksheet for each activity on the WES that lists the labor, equipment, materials, and service needed. The example shows the requirements for a training activity. A benefit of using this format is that you can track the expenses by activity and can develop a good estimate of the project cost for each objective. The next step is to determine the cost of each requirement, which will result in the creation of the project budget. Budget estimates are obtained from the people responsible for managing the work efforts and from the people or units in the organization in charge of procurement, human resources, and finance. In most projects, labor is the largest cost area. The estimate should factor in vacation time, sick leave, breaks, training, social benefits, insurance, and other labor costs. Overlooking these costs jeopardizes both the scheduling and cost estimates. When developing the budget, you will come across three types of budget estimates. The initial estimates, which ranges from minus 25% to plus 75%. Then there is the contract estimate that is more precise at minus 10% to plus 25%, which was used in the project proposal and is part of the contract. And finally, the definitive estimate, the one you will use to baseline the project budget and ranges from minus 10% to plus 10%. This is also called the working budget. There are four basic methods that you can use to estimate a budget. The first one is called analogous. This technique uses the actual cost of a previous similar project as the basis for estimating the cost of the current project. The top-down estimate is a method to estimate a budget when the total project budget is known and needs to be disaggregated into costs for each individual activity with the help from the WBS. The bottom-up estimate is a method that starts with individual activities and the cost of each input and adds them up to obtain the total project budget figure. And parametric estimated, which uses standardized parameters that define the cost of an activity or a task for a specific rate or output. Once the budget estimates are completed, you will need to understand the methods used by the organization or the donor for cost accounting. Cost accounting refers to the method used by the organization to track all project expenses based on a standard accounting methodology. It consists of the use of a chart of accounts, which are accounting codes to categorize all expenses into groups. It is common that the donor and the organization may use different codes. You need to understand the donor and the organization requirements for reporting budget status. You will need to develop a budget management plan that will define the process to manage the budget and adjust it for variances that occur during the implementation. The next step is to get the budget approved. The completed project budget should first be reviewed by the project team and the representative from the finance department. Once the project budget has been reviewed, the next step is to get approval for the project budget. Approval occurs twice in the project life cycle. The first, during the negotiation with the donor, and later during the planning phase of the project, when the project budget is developed in more detail using the chart of accounts, which then becomes the budget baseline. Once the project budget has been reviewed and approved, the next step is to create a budget baseline. The baseline is a time-phased budget that project managers use to measure and monitor budget performance. The approved cost baseline consists of the cost estimates for the individual activities over the life of the project. The project expenditures or actual costs are measured against this baseline as the project makes progress. The cash flow is an important tool for management of the project's budget. The projected cash flow is a forecast of the project expenditures during its life cycle. A cash flow projection not only helps the project manager, but also helps the organization have better control and management of its cash resources. The cash flow will also help control the project expenses as it makes progress. The planned cash flow will be compared with the actual expenses, and you will use it to evaluate any significant variances and take corrective actions.